Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Israel kills Hamas leader Yahya Sinwar, spurring US calls to end the war in Gaza. But Israel's Prime Minister vows to keep fighting until all hostages are free. Asian equities rise on better than expected GDP data and retail sales out of China. House prices, though, continued to fall, underscoring the pressure on policymakers as the PBOC steps up support. Traders raise bets that the ECB may go for a jumbo rate cut in December, following the first back-to-back cuts in over a decade. Meanwhile, traders trim expectations on the Fed after strong US retail numbers. So let's check in on the markets on a day, as we said, when traders are split in terms of their views on the ECB versus the Fed, going in different directions, with the ECB expected now to cut deeper and more aggressively given the moves lower in inflation and the softer economic outlook for that region. Meanwhile, of course, the strength in the US data reminding us that we are well away from any recession stateside. Currently, European futures then pointing lower by 0.3%. FTSE 100 futures currently looking to lose 27 points. S&P futures are flat. Nasdaq futures flat as well. We build up, of course, to the big earnings week of next week. Let's flip the board and have a look cross asset then. Gold is fascinating in terms of the record highs for the yellow metal. Bottom of the list there at 2,710. Fresh records for gold, up 0.7% just in the session today, up more than 30% year to date. Part of that down to the geopolitics, part of that down to US political risk and also central bank buying. In terms of your 10-year yielding 4.09, yields were up yesterday, a sell-off in Treasury debt on the back, of course, of that stronger data out of the US. Euro dollar at 108. Is there more weakness to come through for the single currency, given expectations around further cuts from the ECB? 108 on the single currency. Brent 74.72 as we continue to scrutinise the tensions in the Middle East, of course, currently up 0.4%. Speaking of which, the latest in that region then. Israel says it will continue fighting the war in Gaza even after the death of the Hamas leader Yahya Sinwar. The US President Joe Biden has said his death presents an opportunity to end the war in Gaza, but the Israeli Prime Minister says the mission is yet to be completed.
I'm standing before you today to inform you that Hamas leader Yahya Sinwar has been eliminated. The person who committed the most terrible massacre in the history of our nation since the Holocaust, the mass murderer who murdered thousands of Israelis and kidnapped hundreds of our citizens, was eliminated today by our heroic soldiers. And today, as we promised to do, we settled the account with him. Today, evil has suffered a heavy blow, but the task before us is not yet complete.
Bloomberg Horizon's Middle East and Africa anchor Jemana Persechi joins me now for the latest, the context around this significant news update coming out in the last 12 hours or so out of the Middle East. Jemana, how significant then is Sinwar's death?
Yeah, very significant. And this wasn't the first time that Israeli forces tried to eliminate Yahya Sinwar. But what does emerge from what Israeli military have said just in the last 24 hours is that it was somewhat of a chance encounter this time around. And essentially what happened is Israeli tanks were on a routine patrol around the southern part of Gaza. They spotted suspicious movements in a residential building. Israeli tanks then fired at that movement. It later emerged, much later, that the target of those attacks was actually none other than Yahya Sinwar himself, which was surprising because for the most part of the last 12 months, he was believed to have been living and residing underground in some of those underground tunnels in the network below ground level. Now, of course, Yahya Sinwar himself at this point was the political leader of Hamas after the killing of Ismail Haniyeh, but has been a key figure for the group over the last few decades, also seen as the key mastermind behind October 7th. So yet another victory of sorts for Netanyahu and his government, because not only have they succeeded now at killing two senior political leaders for Hamas, but also this comes on the heels of the killing of Hassan Nasrallah, the leader of Hezbollah, just in the last month as well. Netanyahu himself saying last night, the mission before us is yet to be completed.
What has Israel's response been, at least from its allies, in terms of the US response to this killing of Yahya Sinwar and what it could mean for those potential peace talks?
That's right. And that is the big question here, Tom. President Biden gave some remarks shortly after it was announced. He said there is now the opportunity for a, quote, day after in Gaza without Hamas in power. Also, VP Harris, all eyes as well on the presidential candidate. She said this killing gives us an opportunity to finally end the war in Gaza, and it must end such that Israel is secure. Now, the Secretary of State, Anthony Blinken, is expected to make another trip to the region in the next 4 to 5 days. That would be his 11th time in the region since the October 7 attacks occurred. And the goal here is to push forward with those ceasefire discussions. The big question is, well, there are many. Number one, who once again is going to take over from Yahya Sinwar? Will that person be more open to the release of the hostages? There is expected to be around 100 still in captivity. Unclear how many of them are still alive. The second point to bring up is whether the Israeli government themselves are willing to actually get the ceasefire deal across the line. The Israeli Prime Minister has been accused of wanting to prolong the war for his political survival and also in response to some of the pressure being put on him from the ultra-nationalists within the Israeli cabinet who would not like to see any discussions take place with Hamas. So still a lot of questions here, but certainly the U.S. and the international community do see this as a window of opportunity to get a ceasefire agreed to and to secure the release of those hostages.
OK, Bloomberg Horizons Middle East and Africa anchor Jemana Pasechi, thank you very much indeed. To China now, that is the focus in terms of these markets, at least in terms of the data that is crossed just in the last few hours out of the world's second largest economy. A bit of a mixed bag, broadly positive in terms of the GDP print, retail sales, industrial production, all coming in better than expected. We're going to break down the details, the analysis with Stephen Engel shortly. But in terms of the market reaction to this and the PBOC detailing some of its more support measures, additional support measures, that feeds into a positive session for now, at least in terms of mainland market. CSI 300 currently up 1.5%. The HSI over in Hong Kong rallying as well, 263 points. And the H shares listed in Hong Kong currently also gaining 110 points. So the optimism is there, upside coming through for Chinese equities. Let's get the details on the data front then and bring in Stephen Engel, Bloomberg's chief North Asia correspondent, joining us out of Hong Kong. Stephen, what is your take on the data front that we've seen out of China then? The front page of the Financial Times suggests that it's weak. Our headlines suggest that the numbers came in strong. It's a bit of a mixed picture. Housing was weaker, but growth, particularly around retail sales, coming in slightly better than expected.
Look, we knew the third quarter was going to be fairly weak. We knew it was going to come in at the worst performance of growth in China in 6 quarters, and it did. Yes, it beat the consensus estimate of 4.5%, coming in at 4.6%. But still, that is the slowest since the first quarter of 2023. The surprise, I guess you could say, is that August numbers, monthly numbers for retail sales were pretty bad, 2.1% up. But that jumped up to 3.2%. And all these numbers from industrial production, fixed asset, urban investment, retail sales, and also industrial production, all came above expectations and all coming before the big swath of stimulus. So that is an encouraging sign. That being said, property prices continue to plummet, and there's no turnaround, really, despite housing officials coming out last week or earlier this week and essentially trying to put a floor on sentiment. This is not going to be a V-shaped recovery in China. It's putting a floor on sentiment, trying to gain some confidence for the consumer, trying to gain some confidence in potential home buyers, and then go from here. There's lots of uncertainties. And the National Bureau of Statistics, Tom, mentioned the external environment is increasingly complex and grim. Look, even in good times, Chinese authorities always talk about the grim external environment. But this one is complex and grim, and they're sort of alluding as well to the upcoming U.S. election, which offers China a lot of uncertainty as well.
Yeah, indeed. It could arguably get grimmer as well, depending on who is the new occupant of the White House. Stephen, what have we been hearing in terms of the PBOC and its support around buybacks? And what are you watching for in the days and weeks ahead?
Sure. So the PBOC essentially coming out, again, another support measure. The CSI 300 index has lost a little bit of steam. Yes, it's up today because of these PBOC measures. It's basically announcing a specialized relending facility for listed companies and major shareholders to potentially borrow and then buy back shares. That's kind of a market-boosting move because the CSI 300 has lost 10% since that peak that we saw on October 8th following that raft of stimulus. It's petering out a little bit. And because so many investors are saying, look, we need a number. We need fiscal stimulus. And what I'm looking forward to then is the upcoming National People's Congress Standing Committee meeting. We don't know the exact date, but it's traditionally held at the end of October or early November. So within the coming weeks, they're the only ones. They're the law-making body, obviously. They need to put the stamp of approval to any fiscal stimulus, any special budget, any increase to bond quotas as well. So that's the one we're going to be looking forward to see if they give their stamp of approval to a specific number of fiscal stimulus. But again, I also point to the external environment and the U.S. election. I think some policy moves are on hold a little bit until they know who's going to be in the White House come January.
Yeah, it's going to be a fascinating few weeks, isn't it, in terms of how those two sets of policies interact, at least if we get more details, of course, in terms of how China thinks about that political outcome stateside. Stephen Engel, thank you very much indeed. Bloomberg's chief North Asia correspondent, joining us out of Hong Kong with the details, the context around the data, of course, and what to be thinking about on China in the days and weeks ahead. Now, Treasury yields, the split between the US and China in terms of the data front is marked, isn't it? Treasury yields climbing after strong retail sales figures in the US led traders to trim expectations for Fed rate cuts. More strong data out of the US. Let's bring in Bloomberg's Valerie Teitel for the take now in terms of the market reaction to this. Talk us through the data front then out of the States and how markets reacted to that, Valerie.
The hot string of economic data continues for the U.S., Tom. I just want to take a look at what we have seen just in the last few weeks. All these data prints coming in hot. GDP, durable goods, ISM services, payrolls. Remember, that was a spicy one. CPI. And then yesterday, retail sales, especially in that core control group component, it came at 0.7. The expectations were for 0.3. All of this is rising expectations for third quarter GDP for the U.S. And it's also having a bit of bruising action in the Treasury market. Yesterday, we saw yields climb 8 basis points in the 10-year yield. This is all going to show that traders are really pricing out the expectations for further cuts from the Fed. Remember, they convene just after those U.S. elections at the beginning of November. We're now pricing in, Tom, 41 basis points combined for the November and December meeting. So some speculation really starting to grasp traders' minds on could we possibly see a pause from the Fed before the year is over? We are going to be parsing through any language we get from the Fed. The market is very attuned for any small shift in language from the Federal Reserve.
Yeah, very different dynamics when we think about the ECB, of course. Are we building towards a 50 basis point cut from the ECB in December, Val?
Look, the language from Lagarde was pretty strong yesterday. She was very dour on growth. She said specifically, we're concerned about growth to the extent it has an impact on inflation. She even went to go on to say to call the economic growth sluggish. Take a listen.
Economic activity has been somewhat weaker than expected. While industrial production has been particularly volatile over the summer months, surveys indicate that manufacturing has continued to contract. For services, surveys show an uptick in August, likely supported by a strong summer tourism season, but the latest data point to more sluggish growth.
The latest data points to more sluggish growth. And just what could we get in those PMIs next Thursday, Tom? German services is very close to a contraction. Perhaps that could push the market to expect a jumbo cut from the ECB in December. She was asked specifically if they discussed a 50 basis point cut at this month's meeting. She said no, they did not discuss it at this month, but she slightly let the door open for maybe discussing it in December, noting that they do get new forecast revisions for growth and inflation at that meeting. We did see euro dollar a sink during this dovish press conference, and traders are now pricing in a 20% chance we do get a jumbo cut from the ECB come December.
There we go, a 20% chance. As some in the markets as well argue that the ECB is behind the curve at this point. Bloomberg's Valley Titel, thank you very much indeed with the breakdown of what we heard from the ECB, the market pricing, of course, and the data out of the US. You can get a roundup, by the way, of your stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB. Dayb, go on the terminal. The focus, of course, still on the Middle East, the data out of China and how markets are adjusting to the central bank action. Also gold at those record levels of above 2,700. Coming up on the earnings front, Netflix smashes expectations, delivering a blockbuster set of earnings. We have the details next. This is Bloomberg.
Let's start with, looking into 2025, we're feeling really good about the business. We had a plan to reaccelerate growth, and we delivered on that plan. You can see that in our 2024 financials. We expect to deliver 15% revenue growth and 6 percentage points of operating margin improvement. And engagement, which we view as our best proxy for member happiness, because when people watch more, they stick around longer. So that's retention.
Netflix co-CEO Ted Sarandos speaking after the streaming giant added more than 5 million customers in the third quarter, beating Wall Street's expectations. Our tech reporter Annabelle Drewlers joins us now for the breakdown of the numbers. What was behind the beat in subs then, Annabelle?
Well, I mean, it was a beat not just in subs, it was a beat pretty much on every single metric, Dom. But yeah, we had 5 million subscribers being added in the third quarter. The estimate had been for 4.5 million. And as to why that was a beat, well, it sort of points perhaps to the success of cracking down on password sharing. And that has been sort of a key driver of growth in the business because, of course, as you crack down on passwords, then you've got to have more people that are signing up and actually paying for the service. So sales as well, they rose 15% in the period to just around $9.8 billion. Earnings per share, those also increased. And all this is really impressive as well when you put it against the backdrop because the programming slate was a little bit constrained given the effect of the strikes in Hollywood from last year. So the share price reaction, we saw it rising around 5% on Wall Street overnight. You can just see there that last close and after hours actually. And the stock, of course, more than quadrupled since the low of May 2022, which was a time when a lot of people were really concerned about the broader health of the company. But again, since then, in that period, Netflix has added more than 60 million subscribers, and they're saying there's still further to go.
Yeah, it's been a good run, hasn't it? To what extent, though, is this a company potentially, in terms of the strategy, over-reliant on the password crackdown in terms of driving that pickup and subscribers? I mean, how much further does that have to run?
Yeah, that's really a key question because a lot of analysts are saying, look, we're starting to sort of see that impact of cracking down on passwords. That sort of lift is starting to sort of peter out a little bit, but still Netflix is actually really trying to reinsure investors on that front, and they're saying there's still quite a lot longer to go. They're also going to be pushing through price hikes. That's something else they're saying, of course, that can lift overall profit. So in Spain, for instance, Italy, that's going to come through on Friday. They're going to phase out some of their cheaper plans in Brazil, for instance, later this year. But still, in terms of what becomes the next big growth driver for the business, they're focusing on advertising in particular, and they're saying that the ad business still can grow a lot in the coming years. So they're building out, for instance, their own ad tech or advertising technology, and they're looking for sales of advertising to double over the course of next year. They've also started to increase or invest further in live programming. That's a way that you can try and increase the amount of inventory that it has to sell to advertisers. So, for instance, they've got a live boxing match coming up next month. They're going to have national football leagues that are going to be screened on Christmas Day. And they're also going to start live wrestling 3 hours per week. That comes in 2025, Tom.
I mean, who doesn't love live wrestling, right, Annabelle? OK, thank you very much indeed. Annabelle Drill is breaking down the Netflix earnings for us. Squid Game's come out as well. The next round of Squid Game is the most popular show, I think, ever for Netflix. Annabelle Drill is with a breakdown of the Netflix earnings. Thank you. Coming up, we're going to switch focus. We're going to head towards the conversation around LNG, because as we move closer to those deep freeze winter months, potentially, competition for LNG is heating up. See what we did there? We're going to look at whether there is enough gas to keep Europe warm this winter. Stay with us. This is Bloomberg. Welcome back. We have some breaking news on the earnings front coming through from Volvo Trucks. It is a miss in the third quarter. Adjusted operating profit coming in at 14.07 billion Swedish krona, just above 14 billion Swedish krona. The estimates had been for just above 15 billion Swedish krona. So it's a miss of around 1 billion Swedish krona for the third quarter in terms of operating profit adjusted for Volvo. It was also a miss, by the way, on the margin story and a miss on sales. That is a stock that is up just shy of 8% year to date. That is Volvo. Now, to European energy, where ministers met earlier this week to discuss how prepared the region is to meet its gas needs this winter. With an agreement for Russian gas to transit via Ukraine due to expire at the end of the year, global competition for LNG imports is in the spotlight. Joining me now for a breakdown is Daniela Lee, a senior associate in Bloomberg NEF's LNG team. Daniela, as Europe then starts to ramp up its heating and temperatures are expected to drop in the weeks ahead, what is the appetite likely to be out of Europe for that LNG this quarter?
Well, our latest forecast suggests that LNG imports into Northwest Europe and Italy are projected to follow an upward trajectory in this quarter, reaching around 18 million tons, which is 3% higher than last 3 years' average. There are two main reasons driving this. One, on the demand side, we're expecting more demand from residential, commercial, and power sector. The rising residential commercial gas demand is mostly because of the assumption of normal weather compared to a relatively mild winter last year. And the power sector gas burn increase is mostly because of the planned decommissioning of coal and lignite power plants in Germany. On the supply side, as we have mentioned, Russian gas deliveries through pipeline via Ukraine is coming to an end this year. So next year, Europe will need more LNG to fill in the gap.
Yeah, it's kind of remarkable on some levels that Russia is still supplying Europe with some level of gas via Ukraine as it continues to wage that war there. How much competition, Daniela, is Europe likely to face then for LNG cargoes?
So I think the major competitor could come from China because of the recent stimulus plans. China's economy could rise as much as like 20 basis points as predicted by Bloomberg economists. When translated into LNG demand, it could be like around 2% higher than our base case in the fourth quarter. That's like 5 to 6 more cargoes, which is a bit of threat to Europe's supply, but not to a great extent in this quarter. I would say perhaps the biggest threat is weather.
Yeah, OK, so increased demand out of China, but the biggest threat coming through from weather. What do we know about the weather front and how that's shaping up, what the risks are for a deeper freeze this winter?
So weather is the biggest wildcard, and the latest forecast from major agencies are predicting a potential weak La Nina this winter. And historically, La Nina event has brought relatively colder than normal winter for North Asia, especially to China. And according to our model, this could bring about 1.8 million tons additional LNG demand on top of our base case of 10-year average weather. So this could be a threat to Europe, but the worst case scenario is extremely cold winter in both Asia and Europe. In that case, that would drain the Europe gas storage, and Europe would need to tap any storage, any LNG available in the market, and prices could go up from current levels.
Yeah. Okay, storage currently at 95% in Europe. Daniela Lee, Senior Associate in Bloomberg NEF's LNG team with a smart analysis. Thank you. If you'd like to hear more from BNEF's analysts, download the Switched On podcast on Apple, Spotify or wherever you get your podcasts. Coming up, much more on the City of London. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Israel kills Hamas leader Yahya Sinwar, spurring US calls to end the war in Gaza. But Israel's Prime Minister vows to keep fighting until all hostages are free. Asian equities rise on better than expected GDP data and retail sales out of China. House prices, though, continue to fall, underscoring the pressure on policymakers as the PBOC steps up support. Traders raise bets that the ECB may go for a jumbo rate cut in December, following the first back-to-back cuts in over a decade. Meanwhile, traders trim expectations on the Fed after strong US retail data. Let's check in on the markets then. It's a strong session over in Asia, but there isn't much of a read across so far when you look at European futures, currently down 0.2%. And yes, there's a very clear divergent path now in terms of the traders' bets on the ECB with more aggressive cuts versus the Fed with fewer cuts on the back of the data differential between those two regions. And of course, the US strength coming through with retail sales higher than expected yesterday. Jobless claims lower as well. European futures then off by 0.2%. FTSE 100 futures pointing lower by 27 points. S&P futures are flat. Nasdaq futures pointing to gains of 20 points. Let's flip the board and have a look cross asset, because you did see some selling pressure across US Treasuries yesterday on that stronger data. Yields were up and prices were down. 4.09 is what's being yielded on US 10-year right now. Fewer than two cuts, additional cuts being priced in by the markets for the Fed. About 40 basis points by the end of the year. Euro dollar at 108. Is there further weakness there, given the expectations around further cuts from the ECB? Currently up 0.1% in the session. Brent at 74.69, up 0.3%. And gold bursting through fresh records above 2,700 on the yellow metal, up 0.7% just in this session alone. Let's get back to the Middle East right now, because world leaders have called for Israel to end the war in Gaza following confirmation that Hamas leader Yahya Sinwar has been killed. But Israeli Prime Minister Benjamin Netanyahu has said the fighting will continue until all the hostages are free. I'm joined now by Niamh McBurney, who is the Associate Director for MENA at Control Risks. Niamh, thanks for joining us this morning. To what extent, this is clearly a tactical victory for Israel. To what extent is it a strategic victory for Israel in your estimation?
It's absolutely a significant tactical victory for Israel. I mean, killing yet another leader of Hamas. There are question marks as to whether it's strategic, and that really depends on the next couple of weeks and months, and if a ceasefire ends up being agreed, because Sinwar is now dead. There will be a replacement of leadership, and both sides are going to have to reconsider their positions on a ceasefire, because where we are now is very, very different to 2 months ago, when nominally both sides were slightly closer to an agreement.
Well, indeed, and we'll get your views on the ceasefire and the prospects of that in more detail. But where does it leave Hamas at this point? You touch on leadership of that organisation, of course, designated a terrorist organisation by Europe and the US. What is left of this organisation at this point?
There is still quite a considerable body of the organisation left. It is an organisation that has a diverse leadership structure. There are individuals in Gaza, in Qatar, and potentially in Turkey who would be in a position to, if not lead it, then form part of a collective that would help lead it through this phase. We're aware that the group has been able to get a larger number of fighters to replace those who have been killed, from those who weren't officially members to now join in the fighting against Israel. It is significantly weakened. There's absolutely no doubt about that. But I think we need to be very careful in making assumptions that, this is the end of Hamas. It may be the beginning of the phase of this is the end of Hamas as we know it. But its primary cause, which is seeking Palestinian statehood, we're still no closer to that path. And so ultimately the group is probably going to morph as part of this. And the next couple of weeks, we're expecting to see even more guerrilla type activity than we've seen in the last few months. It kind of really emphasizing that change in how it operates, but nonetheless, it's surviving.
Really fascinating in terms of the future of Hamas and how that organisation, terrorist organisation as labelled by the EU and US, evolves. Niamh, what are we hearing? What is your expectation in terms of that potential ceasefire? We've been hearing from the US and other allies of Israel calling for that ceasefire now. Is the door open, finally, for peace on the back of this?
We don't expect it as we sit here today. This is very much a position that the US has been pushing because it is keen to see a ceasefire and to see an end to a war. However, both Hamas and Israel would need to agree to this. It's not clear that this is the off-ramp that Hamas may have been considering, if they were at all. As part of trying to end the conflict for themselves because they are weaker. It's certainly not clear that this is the off-ramp that Israel may want either. Netanyahu has regularly moved the goalposts for what the Gaza conflict could be, should be, is trying to achieve. And he will take this as a victory, but I think we shouldn't make any assumptions that he is now willing to come to the table. He has implied in his comments last night that, fighting will continue. So I think we're probably as unlikely to have a ceasefire today as we were yesterday.
Niamh, before we let you go, are we still expecting Israeli retaliation against Iran, and what form could that take?
Yes, absolutely. That is still unfinished business. And there will probably be a response. I'll be honest, our team at Control Risks are expecting something within the next couple of days at the earliest. The fact that the US has now deployed the THAAD system shows that Israel is kind of slightly recalibrating what it would look to do, how it would look to do it. But we should expect a response in the next days and weeks, probably targeting Iranian, military and intelligence infrastructure, potentially targeted assassinations. We don't feel that, that there is a greater risk to the wider region, as some have been speculating. We expect this to be relatively contained, potentially for Iran to respond to this response by Israel, but it to be kind of similar to the sort of tit-for-tat action that we saw back in April, and once both sides have had their say, if you will, for things to calm down again in a couple of weeks' time.
Valuable analysis. Niamh McBurney, thank you very much indeed. Associate Director for MENA at Control Risks. Now, within hours of Yahya Sinwar's death, fault lines emerged between Israel and Western nations on what comes next in Gaza. Let's get more with Bloomberg's Oliver Crook, who stands by for us in Brussels for that international response. Ollie, talk us through what we've been hearing in terms of the international reaction to Sinwar's death.
Yeah, listen, Tom, remember this EU leaders meeting began with a GCC EU leaders meeting, the very first ever to be held. Mohammed bin Salman was here in Brussels, the Saudi crown prince, to discuss a number of issues. And of course, Israel and Gaza and the situation there came up. And in fact, one of the only sort of concrete things that came from that meeting was a joint call from the EU and the GCC for a ceasefire in Gaza and in Lebanon. That obviously felt a bit quite far away earlier in the week. Now, with the death of Yahya Sinwar, the sort of tactical and military leader of Hamas, is there an opening for there to be a little bit more progress, as you've just been discussing, on that ceasefire? And so we've had comments from a number of different leaders here within Europe. We had the German foreign minister saying that now Hamas must immediately release the hostages, lay down its weapons. The suffering of the people in Gaza has gone on for too long. Starmer, for his part, saying that, again, calling for the release of the hostages, progress towards a ceasefire. Macron saying the very same thing, saying that you need to really seize on this opportunity to make progress. Macron also saying, though, that there needs to be sort of more accountability for those that are furnishing arms to Israel, speaking in sort of not too veiled terms about the United States. And he will have the opportunity to make that case to Joe Biden today when he meets with Joe Biden in Berlin with Scholz, Starmer, and Macron. What I think is interesting, could you have an opportunity there for the Quad, those four leaders, to discuss and kind of come out with a framework or some sort of joint message towards Israel? Because remember, you have Starmer and Macron on one side being a bit more critical of Israel, while Scholz and Biden having been much more permissive of Netanyahu's action over the last few months. Could you get something in the middle from them? We'll find out a little bit later today after they speak in Berlin.
Yeah, I mean, those Macron comments were pretty sharp, weren't they, around the edges in terms of his take on the US, even if he didn't mention and name the US. Meanwhile, Ollie, you're on the ground there. EU leaders are meeting clearly in Brussels. You are on the ground for us. A lot of discussion. Any actual outcomes? What did the debate focus on?
So listen, what I will say is that there wasn't a huge amount of outcome. There are 2 points that I think that are important to make. Obviously, Zelensky was here and presenting his victory plan. Again, what he was really looking for here was trying to get more buy-in from these EU leaders and NATO members about a sort of invitation into NATO. Zelensky made a sort of speech here in the council room talking about how basically Ukraine had given up its nuclear arms in 1994 in an exchange for an international agreement that was guaranteed by many other countries, including Russia, for its own sovereignty. He says that rather than nuclearizing as a deterrent, what he would like is either joining NATO or another such alliance that creates a sort of framework to deter Russia into the future. The problem is, Tom, I think there was a lot of difficulty for that message cutting through to leaders who were very sort of distracted by a number of different issues. And one of the issues that really occupied a huge amount of time and oxygen for this meeting is the question of migration. This is a key question for the Europeans now, though they didn't have really concrete conclusions. There's a lot of discussion, and what there is certainly happening, Tom, is a hardening of the lines from even the progressives within the EU leaders like Scholz, saying that basically we need to start looking at third-party deportations, how to get migrants back to original countries. The only person that really stood in opposition to that was Pedro Sanchez, the Prime Minister of Spain. But one of the sort of real takeaways from this leader meeting is that you're going to get a much harder line on immigration in the coming months.
It's quite a shift, isn't it, that we're seeing on that topic. Oliver Crook in Brussels for us with the latest on that EU leaders meeting. Ollie, thank you. Here in the UK, regulators plan to ease bonus rules introduced after the financial crisis. This will mean bankers can get some of their cash immediately. Hurrah! Champagne's popping. I can hear it in the background. And are no longer forced to wait more than 5 years for full payouts. The concessions come after banks pushed regulators to soften the rules, which are among the strictest globally. Now, black workers and diversity practitioners in the City of London have told Bloomberg that corporate priorities are shifting away from diversity. The UK's financial services sector had pledged to boost representation in the wake of George Floyd's death. But 4 years later, progress remains uncertain. Bloomberg's Tiwa Adebayo joins us for more. Tiwa, you've done some fantastic reporting on this. We have seen a pushback on DEI initiatives in the US. Are we seeing a similar picture here in the UK?
Well, in the US, the pushback has really been driven by regulatory and legal pressures. In the UK, what we're seeing is that pushback is being driven by firms. So they're cutting down on their spending on DEI recruitment schemes, and particularly those focused on black workers. I've spoken to quite a lot of people in the space, and they're telling me that budgets are dwindling. So one of those groups is the Taylor Bennett Foundation, which operates across the communications landscape, but places candidates at firms like HSBC and Santander. And they said that despite seeing an uptick in 2020, actually since 2022, they've seen a 25% downturn in demand, and that downturn is coming specifically from firms in the financial services and professional services space. So there's clearly a rollback of some of the commitments that were made in the wake of George Floyd's murder, and that's being seen across the city landscape.
Which is really interesting because the data suggests, at least on some studies, that you have a more diverse workforce, and that is a boost across the picture in terms of top level as well, in terms of revenues and profits and outcomes for businesses. There's some research, plenty of research into that. So what is behind this shift then?
So what we're seeing is that a lot of firms committed to these schemes in 2020. They committed to increasing the numbers of black talent. But that commitment happened at a very fast pace. And some of the people I spoke to, for example, Mark Lomas, who is the head of culture at Lloyd's of London, said that perhaps those changes came in a bit too quickly and we're now paying the consequences. And so firms have decided to bring in swathes of black talent through recruitment schemes like the 10,000 Black Interns program, for example, which was the 100 Black Interns program back in 2020. They're bringing in this talent, but they haven't actually adjusted their culture to do that yet. And we're seeing really the effect of that in attrition rates. So at a senior level, we see in UK law firms, for example, black talent is 4 times more likely to leave than their white counterparts. And we see that they are leaving the city before reaching its top ranks. And what a lot of employees who I spoke to who wanted to have their identities protected in most cases, what they're saying to me is they're coming in and then there's this feeling of abandonment without the support that they need to progress their career to those upper echelons.
That's a remarkable statistic, isn't it? Four times more likely to leave as a result of the cultural mismatch there. Tiwa, thank you very much indeed. Really important piece of reporting. You can see there's the podcast you can listen to, and also, of course, the story on Bloomberg.com and on the terminal. Bloomberg's Tiwa Adebayo with that reporting. Thank you. Coming up, I'm going to be speaking to venture capitalist Agate Freimane about why she thinks so-called impact investment is not just a buzzword, but the future of global finance. Is that theory being stretched and tested at this point? Stay with us for that exclusive conversation. It's next. This is Bloomberg. Welcome back. Happy Friday, everyone. Now, venture capital may have declined overall since the pandemic, but the climate technology sector saw its share of VC funding climb. With me now to discuss the state of climate tech and so-called impact investment is Agate Freimane, General Partner at Norrsken VC. Thank you very much, Agate, for joining us in the studio bright and early. Let's talk to us. You raised over 320 million euros earlier this year. Early stage funding, one of the biggest rounds, if not the biggest in Europe in terms of that early stage funding. How are you deploying that? Where are you targeting that fund?
We're just at the very beginning of deploying the fund, and today we see a lot of exciting opportunities in the market in terms of the themes. The number one overarching theme is energy and everything to do across that value chain. But generally looking to see where are our biggest problems today and where do we think entrepreneurs are best placed to tackle them, because the biggest problems also equal the biggest opportunities from an investment perspective.
Where are those? Where does that lead you then in terms of the biggest opportunities?
There's plenty of things to address. So again, going back to energy and everything across that stack, from how do we increase renewable energy? How do we make sure that our grid and infrastructure can actually handle that? Equally, if we touch up on the AI topics, as an impact investor, of course, we've spent our share of time evaluating where can we as an impact investor have the biggest impact on people and planet. And there's lots of exciting developments there as well. For instance, how we can innovate faster through materials, new chemical reactions that can really help us address climate goals.
Yeah, and certainly the energy needs are there, and they're pretty pronounced, aren't they, around artificial intelligence. To what has the rush around Gen AI in terms of funding and the excitement, the hype around that, has that crowded out your space to some extent?
Yeah, it's very interesting. I think it's a good question. I mean, it was that all the headlines was about climate tech and how that's taking off. And then I think the headlines got AI, hijacked a little bit those headlines. Yeah. But at the same time, the fundamentals haven't changed. And in the end of the day, the next superpowers will be both AI companies as well as the next green superpowers. And what is interesting to watch is, of course, at the moment, the first wave of AI has all been about productivity. How do we boost the global productivity? But it's really, really important to never forget the impact lens. And from an impact perspective, we can also see that emissions of data centers are growing at an alarming rate and could triple by 2030. At the same time, again, if we take a look at it as an early stage investor, we always have a glass half full approach. And we just see, again, we have new set of problems emerging, and who are going to be best placed to solve those problems? Those are, again, going to be entrepreneurs. So that's opening a whole new area of potential investment opportunities.
Look, you have multiple investments. You invested in Northvolt back in 2020. Yeah. That was a company that many had pinned a lot of hopes on in terms of being Europe's answer around electric vehicle batteries. They are now clearly struggling. They're hoping to raise about 200 million in terms of re-injecting cash into a business that is facing pressures on multiple fronts. Will you and will your VC firm be involved in that fundraising? Are you prepared to put more capital into this business?
We've certainly seen Northvolt hit a lot of headlines lately, and we have to remind ourselves that delays or layoffs have been very common across all industries, especially large-scale industrial projects. So Northvolt or climate tech have not been immune to that. But the most important question is, who are going to be the winners of tomorrow. Today, we see a lot of companies across all the economies struggling, but who will be the winners of tomorrow? And we would definitely double down on climate tech because the fundamentals haven't changed. Every major nation around the world, every major nation, every major corporate is pledging towards sustainability goals, and that's creating huge amount of demand. So we fundamentally believe that the green companies will be the winners of tomorrow.
Does that involve doubling down on your investment in Northvolt, or do you want to steer clear at this point?
Unfortunately, we're not able to double down. We're a very early stage investor, but if we could, we would absolutely do it. We need more companies like Northvolt.
Do you think they'll succeed in raising this capital?
I certainly hope so.
Yeah. Okay. In terms of the right, are you writing down your stake? Bailey Gifford reportedly writing down their stake by 85%. Have you changed your valuation in Northvolt?
Still too early to say. Too early to say.
Is it? Okay. What do you think it tells us about climate fundraising more broadly? Is there a black mark then over this space as a result of the fortunes or misfortunes of Northvolt? And what does it tell us about the appetite to invest in Sweden?
No, it's a very good question. And sort of having seen the headlines hit the market, one of the worries that we have as an early stage entrepreneur is the headlines now scaring off the next bold entrepreneur who wants to go out there and has the courage to take on the biggest infrastructure project of Europe. We need more bold, daring entrepreneurs. Otherwise, we're not going to have enough innovation. Otherwise, we're never going to meet our net zero targets. So it's really, really important to, again, put it in the wider context. Let's not make it a climate tech issue. It's an economic downturn. All companies are suffering in the same way. But let's ask ourselves the question, who are going to be the winners of tomorrow? And we're 100% convinced that it will be the climate tech companies that will ultimately win in the market.
Okay, I mean, there are reports, and many would suggest it's a management issue at Northvolt as well, and the fact that they didn't have the skilled workers in Sweden. What does it tell us about the failure of Europe to compete in some of these key technologies?
Again, very, very tough question. There's definitely, in terms of if we compare US and Europe, US has been ahead of us in terms of the IRA.
Yeah.
I mean, Europe is obviously on its way to respond with the Green Deal. But I think we shouldn't extrapolate too quickly. And I'm still extremely optimistic about Europe's chance to compete globally, because in the end of the day, when it comes to impact, sustainability and all green topics, we're best placed. We're best placed to win in the long term.
OK, let's hope your optimism pays off. Thank you very much indeed for joining us bright and early in the studio with the insights there in terms of how to invest around the green space and impact investment. Agate Freimane, general partner at Norrsken VC, raising 320 million euros earlier in the year. They are deploying that cash now across the European space. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's focus in on what's happening in the tech space. Mag 7 in particular. If you squint, you can see it. The blue line is the S&P 500. Continue, of course, to notch those record highs. The Mag 7, though, from that July peak has not returned to that level. So you have seen a better performance from the S&P since then, if you strip out and versus what's happening in the Mag 7. Is that a theme that's going to continue? We have the earnings, of course, of the likes of Microsoft and Amazon and Apple coming up this month. To what extent will that assuage some of the concerns about valuations, for example, in the AI theme in the tech space? NVIDIA doesn't report until November, of course. Let's flip the board and have a look briefly at the yellow metal gold, because it keeps pushing through these record levels, back above, I should say, for the first time, 2,700. Solid gains in the session today. Part of that, of course, down to the geopolitical risk story, the political risk in the US, and also central bank buying. Keep an eye on gold. The opening trade is up next. This is Bloomberg.